Hello everyone, Paul here from the Pin Academy. Hope you're all enjoying your holidays. So I didn't want the year to end before we tackle something that you guys have been requesting for a couple of times. So I want us to speak today about market direction. Some of you have been saying that determined direction is a problem for you guys. So I want us to iron out that issue. As usual, the way we do our things, we are going to be using a setup that we have shared before in one of our breakdowns. In case you don't know where we share setups from, we use our social medias, Instagram, Facebook, and TikTok. So make sure you follow us there so that you don't miss out on those breakdowns. So the example I'm going to use is AUDUSD. The last time we spoke about it, we had just created this M here, and then it had broken below this level. We said there was a level that was not properly tested here. So we wanted it to be tested, but ultimately we're targeting this area. So after here, we expect the market push down, then finally come back to this level here. But currently the price is above, and I'm going to be doing a breakdown with you to see exactly how you determine direction on your side. You don't have to copy my time frame exactly that I'm using. You may decide to use yours that you're comfortable with, because most of you are not, you don't like swing trading, and yet most of the setups we share swing trading setups. You can use day trading time frames. I've taught you guys how to determine your own time frames. You can choose the time frame that you're convenient with, right? So without wasting time, what are the things that we're going to be following? One, you need to understand the uses of the time frames. I've already mentioned that. You need to have a time frame that gives you structure. You need to have a time frame that gives you the direction, which we're going to be speaking about today. And then also you need to have a time frame that gives you the entry, right? You cannot, most of you are making mistakes of using refining time frames for getting direction bias. Most of you are using structure time frames for taking entries. And that's what is causing problems. So you need to understand exactly the time frame that you're using, right? So that's the first one. We need to understand the time frames, right? Personally, I use monthly for my directional bias, and then weekly for my structure, right? So that's what we're going to be focusing on. Now, the second thing that you have to focus on is what we call the rules of the structure that you're trading. I've spoken about a direction time frame and a structure time frame. So in that structure time frame, what structure are you using? For example, on our channel here, we've spoken about M's, we've spoken about W's, we've spoken about impulses. So you need to understand the rules of each of these. And those are the specific things that you need to focus on when you're trading. They have rules. And also inside those rules, then you determine that I'm trading a reversal, I'm trading a continuation. I've also mentioned here a couple of times that if you're a beginner or you're not yet well conversant with trading with the minimal experience, do not trade reversals and change of trends in big time frames. Always flow with the market direction. Go and trade continuations. Continuations are very easy to determine, right? So after that, the first one, understand time frames. Secondly, the rules of the structure. Then thirdly, as a trader, you always need to keep up with economic activities happening that day. And like I told you, there's a platform that I use that is very convenient, very detailed, which is called Fast Bull. You can go to Fast Bull and check out their economic calendar. It's a bit very detailed. You know, as a trader, you have to backtest. How often has this data come out? How has it been affecting the prices? The economic calendar, if you check it out, it's very, very detailed. For example, if you click on the economic calendar, you can filter it out and also put it according to the currencies that you're analyzing. Remember, you don't have to check news of currencies or a pair that you're not analyzing. So when you click on, let's say, on this, it gives you a detailed information of what you want to see of different years that you need to compare with, right? You can use this information below. Also, they have AI signals, which you can compare. As a trader that has some bit of experience, you can compare if it's aligning with yours, and also analysis from different people. You can check them there. It's 24/7. It's always up and running. So as a trader, make sure you keep yourself well acquainted and informed, right? So you can check news of different securities, not only Forex. We have news of stocks, news of indices, in case you trade those. It accommodates all types of traders. Now, personally, I do love checking the institutional data. That really favors me. I like using it, the institutional data, and the quotes. They also have it down there. This is the AI signals. Personally, I love this section here, and then the interest rates, right? So coming back to the direction thing, let's continue. So let me just clear this so that we can do it together. The current price here. Like I told you, my directional time frame is monthly. Now, if you're to observe here, how do I use monthly to get my direction? I'll come here and observe that the market was moving down, but whenever it reached some place, it was being rejected downward. So I'll just come and I identified that there's a trend line here. Now, personally, I'm not a very big fan of trend lines, but you can clearly see, you cannot deny this, that here, whenever the market reached a certain level, there's a diagonal resistance. Even currently here, you can see the market is reacting. Now, if I'm not a fan of trend lines, what do I like using? I like using the horizontal factors. So if I observe here, the market, whenever it reached a certain point, it was turning, right? This area here. The price turned from here to react a bit upwards, then broke down. Instead of testing it, it went and touched the trend line, then it was again pushed down, meaning making this a false breakout. Then you see it came back and tested this horizontal level here, acting as a resistance. So currently, there's a possibility of the market reaching there. If you use slabs, you can put your slab here and you can clearly notice that currently the price is exactly in this level here, because this is a very strong level. Support here became resistance, false breakout, resistance, push price down. Again, we're approaching here. So meaning that we're at a resistance. Now, if we're at a resistance, the keyword is here. What is a resistance? A resistance is a level above current price where we expect, the keyword is expect sellers to come into the market. Now, we are expecting because it may happen or it may not happen, right? So if it breaks above, keep in mind, where is the level that price could be coming to? The level price could be coming to is this next turning point here, right? Remember, this is monthly. Someone may be saying this is a small distance. This is monthly. Then also, if the market does not break, where is the possible place that it could be going down to? It's this neckline here. You can see there. So you will mark it. So since I don't like trend lines and I like to keep my chart very clean, I'm going to delete the trend line. I just want to put it there for people easy to understand, right? Then I'll go down to my structure time frame. Remember, we said first identify the direction and go to your structure. Now in structure, what are we looking for? We're looking for W's, we're looking for M's, we're looking for head and shoulders, we're looking for inverse head and shoulders, we're looking for trending markets, right? Now in this case on AUDUSD, what do we observe? Very clear. We can observe that the market actually is trending. It broke this neckline here. How? We had the resistance here, push the market down. We had the resistance, push the market down. Resistance, push the market down. We broke above and retested this area. Again, now we have broken above to come and reach this point here. So what do you observe? We observe a market making higher high, higher low, higher high, higher low, higher high. So currently we are here. We have broken this level. What do we expect? We expect the market to give a pullback. Remember, monthly is saying that we are at resistance. Weekly is saying that we have made a new high. What do we expect? We expect a pullback. So resistance equals to looking for selling opportunities. Making a new high to break a structure. What does it mean? It means that we expect a sell to come and retest this level here, right? So monthly and weekly are matching. Now, I don't have to ignore daily. You also have to identify a time frame which gives you a confidence factor. For example, I use daily to make sure that I'm not buying at resistance or selling at resistance. For example, someone should not be looking for buys here. If you want to look for buys to come to this level, the market has to first break above, retest, and it comes here. If not, you're looking for sales. You don't have to look for sales because here the market, you can clearly see is making highs, lows, highs, lows, highs. There's also a mini trend in this distance. Yes, we want to sell up to this area here, but don't ignore that we have a previous resistance, which is now support here. This same level, you can see it in your entry time frame. My entry time frame is H4, right? And when you come to H4, it's clearly here. You can clearly see this is the same. When you adjust, it's the same area, right? When you go back to daily, perfectly aligned. Let me just change the color to green so that you don't confuse it, right? So if I want to look for a sell, I wouldn't want to look for a sell at a support. That's what I mean by selling at support. And if you want to look for a buy, you buy here, you'll be buying at resistance, right? So if you want to sell, let it break below here, let it lose momentum of going upwards, then you can take your sell. If it breaks above, let it lose momentum of, let it sell with a weak momentum, then you can continue upward to their target, right? But you clearly see that we have aligned perfectly the levels that we want to utilize, and we have determined the direction, which is clearly aligning perfectly with our structure time frame. Just to take you through, how did I get up to this level here? We started with monthly. We first identified where price is exactly. We identified that price has reached a previous support, which is now acting as a resistance. At resistance, what are we looking for? A selling opportunity. If we are to sell, where are we going to? If we are to break, because we are saying we expect sellers to come here. Expecting means it may happen or not. If we break, where are we going? We have a certain level here, right? A significant level that was rejecting price, right? Together. Then we came to our structure time frame to determine what are we going to trade, right? So if you trade reversals, you can be looking for sales to come here. But if you don't trade reversals, observe the structure that happens here that will give you a target, right? because a continuation, we are trading high, low, high. So you'll be waiting for the price to come back down here. Look for a change of trend, then you can take a buy, right? Those are the two types of traders that you can utilize a trending market with, right? Even if it is an M, some people will be trading to the neckline, others will be waiting for the neckline to go downwards. Together, so you have to determine and choose what type of trading you're going to do. So I think you can clearly see that we have established a relationship between the direction and the structure, and all of them are communicating about a potential and possible drop. But even if it's giving you that, it's not a must that you should sell immediately. And where do we check that from? From the daily time frame. And we observe that currently we're at a previous resistance, which is now support. I don't want to sell at support. Even your entry time frame clearly shows that. It shows that the market is still bullish. You're observing high, low, high, low, high. So it's clearly at support. It can decide to break above and continue. We're together. So if it can create a double top, then it breaks down, or it creates a lower high, breaks down, weak momentum, then you can look for a sell up to this level. That is how you determine direction. And when you put them together, we call this a top-down analysis. So that is it. I hope you guys have benefited out of this and you can utilize it. Those who trade AUDUSD, compare to your analysis that you've made and see how you can utilize it. That's all from us. Don't forget to follow us on social medias, Instagram, TikTok, Facebook, even Twitter. And I wish you guys all a happy new year.